Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURCHF because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which was turned support here. The market tested its zone and rejected it to the upside, and once again support here with the market testing it and currently starting to reject it to the upside. So here on the monthly, everything looks quite bullish, and we could expect some bullish price action to be created away from this quite strong monthly demand and support area. Going down on the weekly time frame, what do we have? From a weekly perspective, we can see how the market has already created a previous area of demand and support here, another one here, and there is the possibility for a new shoulder to be created at this level. Now, why do I say shoulder? Because if we look at the movement of the market, we had impulse, correction, lower low, equal high, and rejection lower. When you see impulse, correction, lower low, equal high, and rejection, that is where you usually get the creation of an inverted head and shoulders, with the left shoulder here, head here, and right shoulder here. So in a situation like this, we are actually at the zone in which we should have the creation of the right shoulder, from which bullish price action could be expected. Dropping down on the daily time frame, what do we have? Now here in the daily, things get even more interesting because during all this impulse to the upside, we can see one candle which was not related to the move, which was exactly this red candle here, showing how the market, during this massive rejection to the upside anyway, found resistance at this zone, showing how this is previous daily resistance, which is now turned support here. And we can also notice the creation of an M pattern, and in general, after the creation of an M pattern, what you could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is previous daily support, which is now turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, what we can see is that with the last reports, net positions have started to get decreased. We went from 165k to 139k net positions. However, in the long term, the euro has been getting stronger and stronger and stronger. We went from having a negative net positioning of minus 47k net positions with way more shorts than longs to now having the complete opposite. 139k net positions with way more longs than shorts, 222k longs compared to only 82k shorts from an institutional perspective on the euro. So even though in the short term we have seen some decreases of net positioning and weakening, in the long term everything is extremely bullish for the euro. And if we go and see what we have on the CHF, we can see how the CHF is getting weaker, going from minus 3k to minus 9k net positions, and a weak CHF and strong euro is exactly what we need for this potential rejection to the upside away from this area, as we would like to see for the potential completion of the daily M pattern. So how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of this daily M pattern at the neckline. If you want to learn more, so what I'm speaking about when I say valid entries and these kind of things, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to the mentorship program completely for free. In it, you will have all my courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that at the moment there is this massive promotion in which you can get completely free access to the mentorship program by following these 3 easy steps. So I really suggest that at least you go and check it out at TransparentFX Trading, and I will see you on it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.